This recording is for Chapter 5, Tax Return Problem 3. Keisha Sanders. So it says Keisha Sanders is a single taxpayer who lives at 955 Oak Leaf Lane in Pine Cove, Arizona. Her social security number is 412-345670. She reports wages of $83,400 with federal withholdings of $12,510. And she provides the following information for her Schedule A itemized deductions. First thing we're going to do is start Keisha's 1040. So, Keisha Sanders, 412-345670. She's a single taxpayer. She'll be able to claim herself and no one else. It tells us she has wages of $83,400 and no other things besides the Schedule A. So I'm just going to go right down to line 22, add up the wages again. And then this number carries down to line 37, and this is also her AGI. Now this is the point where we're going to go fill out Keisha's Schedule A. And this is for her itemized deductions. Now, just remember we take the higher of the itemized deductions or her standard deduction. Keisha being single, her standard deduction would be $5,700 for 2010. So we're going to type Keisha's name up here and her social security number. Okay. For medical expenses, Keisha has doctor's fees of $500. So let's open this up. Medical. And the problem, she has doctor's fees of $500. That counts. She has prescription drugs. $200. The next thing listed is vitamins and over-the-counter drugs. That does not count towards her Schedule A, so I'm going to leave that off. She also has dental implant to correct an overbite. And that does count towards her Schedule A. And her health code fee does not. So her Schedule A medical deductions should have a total, if I could type here, $500 plus $200 plus $1,600. So we're going to put the 2,300 right here. Then it asks us to enter line 38 on the 1040. So I'm just going to click back to our 1040, and line 38 was $83,400. I'm going to click back to my Schedule A, $83,400. That's her AGI. Now medical deductions are limited to anything above 7.5% of AGI. So the first 7.5% of AGI is not deductible. So we're going to take $83,400. We're going to multiply that by 0.075, and we get $6,255. Now, line 4 says subtract line 3 from line 1 If line 3 is more than line 1, enter 0. So therefore, Keisha does not get any deduction for those medical expenses that she paid. Moving on to taxes paid. It says she had state income tax withheld of $2,950. She also paid $350 in 2010 for money she owed for 2009 taxes. So that's going to count too. So, and that's $350. So her income tax is going to be $3,300. It says she had real estate taxes on her principal residence of $1,700. Real estate taxes, and that she has personal property tax of $150 and a registration fee of $50. Now, she has personal property tax. That's going to go on line 8, personal property. And that's $150. The registration fee is not actually a tax based on the value of the car, so it does not count on the Schedule A. So for taxes paid, we have the $3,300 plus $1,700 plus $150. So she has $5,150. Now, Keisha also has mortgage interest. So she has $8,100 on a qualified residence mortgage interest. She has MasterCard used exclusively for personal expenses. She paid interest of $425. That does not count. And her car loan, her interest that she paid on her car loan for $600 also does not go on her Schedule A. So the only thing she can report on this line is the $8,100 in qualified mortgage interest for her primary residence. She also donated some cash to charities. So we're going to add this up. Her cash to charities, where she had $3,100 to her church, she had $100 to the United Way, and she had $200 to PBS annual campaign. So that's going to be $3,400 in cash. She also donated used clothing, and it says it has a thrift shop value of $350 and an adjusted basis on the date of donation of $1,300. We're going to use the thrift shop value. So she's going to have $350 here. So these are going to be her charitable contributions. We're going to have $3,400 plus $350, $3,700. $3,750. So in the other category, she has investment publications, a tax preparation fee, business dues and subscriptions, and safe deposit box. So the item that is going to be an unreimbursed employee expense will be the business dues and subscriptions. So that's going to go here. And then she has a tax preparation fee of $275. And then the investment publications and safe deposit box go on line 23. So that's $150 plus $75, $225. We're going to add all three of these lines. Oops. We're going to add all three of these lines together. So we have $350 plus $275 plus $225 equals $850. It then asks us to put line 38, which is our AGI. And then this is subject to a 2% floor. So it must exceed 2% of AGI. So 83400 times 0.02 equals $1,668. So then we subtract this from line 24, and if it's more than line 24, enter 0. So we're going to enter 0. Now we're going to add up all of Keisha's itemized deductions. So she doesn't have any medical expenses. She has $5,150 in taxes paid. She has $8,100 in mortgage interest. And $3,750 in charitable contributions. So Keisha has a total itemized deductions of $17,000. Oops, I clicked a little too far. I was moving slowly. So on line 29, we're going to add up the total, 17,123. And we are going to move this to line 40 on the 1040, as you can see here. And we're going to choose to use this 17,000 instead of her 5,700 standard deduction because it's more. One, 7, 1, 2, 3. So then I'm going to subtract that from my 83,400. I get 66,400. She has one exemption herself, so I'm going to write in here $3,650. I'm then going to subtract that as well. So she has 62,750. 62,750. Now I'm going to, you can't see me, but I'm pulling out the tax table and I'm looking up in the tax table taxable income of 62,750. And I'm going to take the higher number, so that's going to be 11,875 in tax. And now she has no alternative minimum tax. And we're going to do 11,875. And it says in our problem that she had $12,510 withheld. So and now we also don't need to file a Schedule M. So I'm clicking to my Schedule M. It's Keisha Sanders. 412-345670 is her Social Security number, just like everyone else in the book. Okay, question 1. Does she have more than $6,451 in wages? Yes. If so, skip to 4 and enter 400 because she's single. Now we need to enter her AGI, the magic number. So her AGI was 83,400, and we're going to enter 75,000 because she's single. Is the amount on line 5 more than line 6? The answer is yes, so we need to subtract that. Okay. 83,400 minus 75,123, 8,400. I'm then going to multiply this number by 0.2. $168.02. And then I'm going to subtract the 168 from 400. $232. So Keisha gets $232 in the Making Work Pay credit. She didn't have any Social Security benefits and did not collect any of her stimulus, so she gets $232. Carry that over to her 1040. So we're going to add that to her payments that she made to the federal government, plus 12510 equals 12,742. So I'm going to subtract what she owes, and she's going to get a refund of $867. And there it is. And that's an example. That is a harder example than you'll do in your homework for Chapter 5. So my suggestion is that you read the chapter, review the slides, and then practice 2 problems where you prepare Schedule A's with not as many items on it. So, all right.